Hi everyone. Good to see you in this Mission 4 live. It shows you are serious about making money and developing wealth, right? Today's session is very important. Identify a wonderful business, right? It's very core. And today we are going to see, Mission 4. I hope you have completed Mission 1, 2, 3, which is a base foundation, right? Which creates the right mindset and flow to you. And with this, we are starting with the Mission 4, right? The mission today is we are going to see at the end of this session is how to identify wonderful business based on value, investment strategies, and how to make the wealth on that, right? What is the definition of wonderful business? Uh, First, a wonderful business is a company that consistently creates long-term value, right? The business itself is creating the value, generating the strong profit, generating how it's creating value. So of course, it's delivering the end customer services and products and creating the profit on that. And with the minimum capital, right? With not much, asking the capital of capital and manage and with the management effort, right? But today we are going to mainly focus on the business characteristics. Management you're going to see in the mission 5, which is the next one. In this term line, we are going to see, it's a few important terms. The identifying these companies is very nowadays is very button of click, but I want you to understand what is those terms really means, because the terms maybe comes very beautifully sometime, but if you start investigating more, the story is different, right? Therefore, I don't want to get stuck with the blind numbers or terms, but I want to get inside of you. That's why I'm starting with this some detail. After that, we'll start with the actual exercise, live exercise for you. What is return on capital employed, correct? This is what is how much, in simple words, if you ask me, suppose if starting some business, how much capital you have added, right? Maybe from equity as well as through your debt. Return on capital employed is identified with the formula, as you can see. Earning before income and tax, which is operating profit, divided by capital employed, right? And it is a percentage, of course, multiplied by 100. Earning, I can see earning before interest and tax is a, you can say, and capital employed is a, what is capital employed is total assets minus current liabilities, right? Current liabilities, which is happening maybe outstanding to payment to someone and so all those, which is typically less than month and so. Uh, why return on capital is important, right? It measures efficiency, how well a company using its long-term financing, right? Long-term financing coming from the maybe equity, as I said, or maybe from debt. And it's useful for the identify the companies also for same kind of capital, how much is generating return on capital, right? Otherwise, if it's very high, it shows very good, as you can see. Generally means companies using capital more effectively, right? And that is user overall idea. And it should be not compared again with the same industry. It should not be compared with some, say FMCG company with a real estate company, right? Because they're totally different. The nature of the business is different. We try to compare the same kind of industry. This first parameter is return on capital employed, right? how much कितना पैसा मैंने दिया और मुझे कितना पैसा मिला, as simple as that terms. Return on equity. Return on equity is specific. It's total net income divided by shareholders equity, right? Equity which shareholders like us going to put in. Net income comes from the total revenue minus total expenses, and shareholders equity is total asset minus the total liabilities, which is come to the shareholders fund, right? Which is maybe in equity as well as the reserve capital, all those which is belong to the shareholders. Why it is important, how much a company makes money rupee, if someone is putting one rupee as equity, how much he's able to be generating, that business is generating. It is again related to efficiency, but now it's specific for equity. The last term, which was written on capital employed, was more broader, which is including equity plus that long-term debt financing. Higher return of equity represent typically, efficient management, strong profitability, right? Many kitna paisa, I kept it and generating more. Lower is exactly opposite, and this to company again is compare the same companies in the industry. Third is the sales growth. Sales growth is important because company has to grow. If as you know, if you see in India is a growing market been for like couple of decades, and so and it's going to remain because of the demographic which we have. We have to focus these, companies which are doing the Sales growth, maybe, producing and selling the products and goods and services in India, or maybe after exporting to the other countries. The sales growth comes, of course, with the current period sales minus previous period, this difference. How much growth is happened is because it's growth. Divided by previous period sales, right? It's the percentage gives. One example I given last year, suppose it has made 1 crore. This year has made 101.2 crore, right? The total source growth comes up previous current year minus previous year divided by previous year. This gives 20% growth, right? That means that sales which is generated in this year is 20% more than the last year. If positive, of course, the company should be as is growing more. We should be look at it should be growing consistently. Maybe once a while, maybe go here and there because of the market conditions, or the company might have getting into the new phase of development or new product lines. Just we have to see more deeper in those. But overall, just see number, it should be growing phase, right? Then it may be grow in what 1-2% or maybe 20%, 100%. All the ranges are there. Then we have to see how this growth has come. One more point, sometimes happens here is in sales growth, you have to be a bit careful. Is it in the sales growth is coming? Is it from the exceptional income because of some land has sold out, some brand has sold out, or something which is unusual income has come, right? And that we'll be careful. We have to just discount them to identify the actual business core business growth. It's very important to understand how business is growing, and it's linked to the other metrics like profit growth, return equity, and market value, right? And this is very important. We typically, as a investor, we should be looking at the good amount of sales of growth, maybe 2 digit and higher than that. Second, which I look after is fourth is I say profit before tax, right? I look at the profit before tax. I understand profit after tax, but I give more importance to profit before tax. Why? I will see now. What is profit before tax is the revenue minus all expenses except taxes. I am not including taxes here. It actually shows the core business profitability, how it is, happening, how much growth is happening. Because taxation YMC as written here, a company can adjust it. The multiple ways company can adjust in for against. Therefore, and it's fluctuate also. But taxation people try to manipulate the PAT, right, by adjusting the how much tax, or they show deferred tax and all those things. But if you look at the PBT is more realistic. Of course, I understand taxes you have to pay, but there is multiple other ways in accounting goes. How you can manipulate, you can delay it, or you can pay higher to smooth out the PAT. But the PBT is not like that, because you are going to show it's going to real picture with respect to how much is income has come, how expenses has come, expenses in terms of also including the interest amount. Fifth is a debt to equity ratio. It's very important, particularly the companies which are very heavy in the capital, right? Debt to equity ratio is the total debt is house and divided by shareholders equity. Total debt is including both short term and long term, and total shareholders equity is a share capital plus reserve and surplus. What matters is higher the ratio, it shows companies more debt oriented, it's taking more and more. I see a lot of companies which are growing, the sales are growing, but the debt is growing more faster, right? Typically this kind of happens, real estate companies, or maybe in project based companies which are doing the executive projects. And so as they're taking more bigger and bigger projects, they have to take more and more debt, because to manage their cash flow, because they have to. What problem happens with this kind of tender based particular companies? They're doing this, it shows very higher sales, but if you see the numbers detail, the debt to ratio is fluctuating or increasing higher, and that impacts because it would going to put more interest rate and all those things. Because you have to understand, in tender based, typically the two only category based on tender is owned. First is a technical basis, is it qualified and so forth. And second is the lowest bid. Right, in the lowest bid, what happens? They have to cut down the margins. They have to give the good terms, payment terms to the client and all those things. Right, we have to increase this, and these all slowly get affected. Debt to equity is debt to, because it should be under control. I understand there is something Debt to control there for power companies, infrastructure companies, but it should be manageable, and lower is better. Six is a price to earning. This is a, price to earning ratio is a market price per share, right? Market price, which is running in stock market is daily, is of course that's why going to change daily also. And earning per share, EPS. What is EPS? Is a total PAT, recently PAT you can take, divide total number of outstanding shares, right? Total number of shares issued to the public, including the promoters and the common shareholders or any other institutions, that is the earning per share and used to price to earning. And as I say in the right table, a higher PAT is it shows is more expensive. Market expect higher. No, one of the reason may be market expecting this company is going to be higher and returns over the future. That maybe is discount giving market is giving a higher PE ratio. Lower maybe it's a cheap company, maybe it could be undervalued or have maybe weak growth also. It's not always having a low P is good, right? Because I'm going to show now how you can identify the companies in a single button of click, right? But you have to see more deeper. That's why my intention to give understanding you to understand those terms. Don't take blindly. As I said, in the lower P, maybe good cheaper company, good company is there, but cheaply available because of market crash or overall, or some event happened in the company for once a while. But that may drag P ratio, or it may be fundamentally the company may be bad, right? Because of it's not growing up, the issue with the company management, all those things, Therefore, you have to see, uh, P ratio, but it's very, I can say very approximate. Many people use it as identification is undervalued company, lower value. Of course, you can take as a first snap to understand the business. Once you screening the company very quickly, it gives some guidance, but don't take that as on the face, but try to dig more and more, right? That's my initial there. And again, limitation with this is it doesn't include the debt, and so as you can see in the formula, there's no debt mentioned here. It's misleading. It may mislead also because maybe the P may be good, and so but the undervalued debt is very high, right, which may not be able to pay it out. That comes from the interest coverage ratio, right? What is the interest coverage ratio of the company? Interest coverage ratio is earning before interest and tax divided by interest expenses. Uh, interest expenses means how much interest you have paid in the last 1 year and so. As an example, suppose earning before interest and tax is 30 crore. Interest expense is 5, right? 30 divided by 5, it's a coverage ratio 6. This means the company is earns 6 times more than actual interest cost. It is comfortable typically. It should be more than 3-4 times. This of course based on that in company size and the nature of the business, right? How is interest coverage ratio, but usually it should be in comfort. So once a while it may go a bit down also in good companies also because of they are doing big capex, and so but only point they should be doing capex in the and that should be the product which service is going to sell. It should be sellable and be able to generate the maintain the profit margin or is growing it, right? It is a good indicator to understand how safe the company is there and how well the management is handling the debt. All right, it gives operational consistency and efficiency of the again company. Eighth is a free cash flow. Free cash flow is very important. It's a free cash flow. It comes from operating cash flow minus capital expenditure. Right? This is actually, if you ask me, the rather than PAT, you should be looking at this more. But very few people understand this. What is a free cash flow? It is very important. This actually shows the X-ray or this bottom line shows how much money is मेरे घर में कितना पैसा आया है, right? Not the PAT. PAT maybe manipulative. Maybe the money is going to come in the future or it may not come. Default happens and so. But cash flow is as on record. पैसा मेरे बैंक अकाउंट में है, right? That is the cash flow. They'll focus on this. It should be typically positive. I guess in the exceptional cases once a while, as I said, because of expenditure and all. But free cash flow should be positive, which comes from operating cash flow, how much cash they generated from operations and minus capital expenditure. Right? Simple. If you just look at the formula, of course, even capital expenditure is not there. The operating profit is almost equal to free cash flow, but capital expenditure may be required to run the operations or grow the business, right? We put the more factories or industries and more connections, more distribution network and so forth. A positive, as you see in the table, as a positive FCF, company generating more cash than it spends, right? And it's a good, strong financial health it's indicating. And it will paying the good dividend and reducing the debt and all because it's generating more cash. You can award the shareholders with the dividend and reduce the debt also, which is like a saving. Negative FCFs indicate the company spends more than it. मतलब पैसा ज़्यादा खर्च तो bit, you have to be, but it just glow your orange and first orange light, understand why it is happening, and if you're using okay, then it will be green or it will be return the red. All right, and because the management is not diligently handling the money or the company's so nature of the company is hogging just only money. All right, it's not going to. And if we have seen the companies which is not generating the free cash flow, but the company the management just to keep the shareholders happy, give them some dividend. But be it again careful, this game cannot go for long. That has to be stopped because you don't have money, actual money, right, coming from the operations. Free cash flow, as I said, it's a represent the actual cash available to the shareholders, lenders, and again to reinvestment for the company. If again its limitation, again its flows fluctuate based on how much cash is coming and capex is handling all those things. Of course, negative cash flow also is not bad. It may be indicating a future growth failure, as I said. I need to analyze properly a debt and profit trends. That is going to give a real picture of the free cash flow to you. Ninth is the dividend yield. Dividend yield is annual. What is that? Is annual percentage? It's annual dividend per share. Suppose that some company face value is 10 rupees, is giving 5 rupees as a dividend, which is a 50% dividend. Then that is a total 5 rupees is the total dividend that company has given for whole year and for a given share. But what is the market share price today? I give one example here. Suppose the company pays 10 rupees dividend, and but current price is 200 rupees. In that case, the dividend yield is 5%, right? We have to always look at the percentage, how much percentage for a given price is available as a dividend yield. If you see 5% is now it's much better than the current bank accounts, right? Saving account also nowadays paying 2 to 5% and so typically 2 to 4%. This company is paying higher. Higher dividend yield, of course, is often is very mature, stable companies like typically you see utility companies, huge companies are giving, or banks also may give. Again, moderate maybe some which is the large cap companies are typically giving, and low dividend startup kind of growth companies, just growing. They just don't want to distribute initially. They want to use it, whatever money is generating, is want to pump it again the business and grow and grow. Maybe sometime in the future, based on again how the things pan out with the management, they might give a dividend, right? Therefore, you can't, these why I'm kept it, actually, just to understand. I've seen a lot of companies in my 21 years. The company is doing well, right? This company is doing well and is growing, but they still the management doesn't give the dividend, right? I've seen in their annual report, if you dig in, they say in a single line, we want to preserve the capital and we are not ready to give the dividend, right? The single line. But if you still see more detail, the management is increasing their salary perks and bringing them more families, giving the salaries to them, moving from the small office to big office, and all those things they are doing. But still, they are not ready to give the dividend to the shareholders like us, right? And it shows should definitely glow orange lights, may not be red light, but definitely orange lights. Then you have to see the intent of the management, right? They are ready to share the wealth with the shareholders, and these people kind of typically, they find n number of ways to how to take out the money from company in some other way, maybe, funding some sister companies and, buying some plots, a big house, bungalows and all those things. But, therefore, I don't think, companies that are doing dividend is not good companies, but you have to see in proper perspective as a holistic picture, but don't take as the, face value. As I said, the same thing I written here as why it matters. Maybe Few people are very, a dividend, they look for dividend companies like, who are the conservatives or came from the fixed deposit mindset, right? There's nothing in wrong there in that. But you have to just see those companies should be giving dividend, consistently for a long period of time. It's not, one or twice they just given after that, the company has gone bust, right? And but typically these higher dividend companies may not be giving, giving high, appreciating capital appreciation may not be really high. But if your choice is profitable, people like people retiring or for very risk averse people can look at higher dividend company. These are the again its limitation. As I said, is not due directly here, but it's again you're comfortable. If you're comfortable with the higher dividend, you can go as a fixed income instrument kind of thing with less capital appreciation or maybe nil also. But well, don't for you for dividend yield with zero also fine, but you have to see is it really the real picture or there's some intention behind the management. No, this is the wonderful, I just want to give quickly presentation on this so that you can understand the concept, why it is important. Because I don't want to, just to get bumped down the parameter, etc., and not understanding just why it is happening. But we should be understanding why some number, because each number has some story, right? Again, I haven't gone the story behind beyond here. Sometimes the numbers are also manipulated, right? Therefore, you have to be careful. Therefore, you have to read bit, annual report also. We'll see in some maybe sometime in our program how to dig the annual report to understand the red flags or orange flags highlighted by the accountant, all the accounting companies and review companies. With this now, I hope you got a lot of notes and insights. Let us now move to the actual work which you want to see today. What I'll do, I'll go to my, first we go to Screener. No, Screener is, if you don't have no Screener.in, it's very good site. It's Mitchell and Brothers have created this. They have put a lot of effort, and it's very good site. I really recommend this site in the Indian market. You should watch and understand this better. I logged in here in the free account. I have one more paid account which is for myself. But if I'm just assuming I want to play with the same view, if you don't have account, your account you can open easily with the Google account and it's very easy. But since there's some also pay annual payment is there, it's very nominal, and you can pay it and take you can get more features. But currently I have logged in into the free account. Okay. Now, with this, what I can show, you can go, this good company, for example, if you're looking for some company, let's say Infosys, right? Just click it. In single screen, it gives a lot of details, right? That's why I like this, in some company, I came across a new company, it's the first site I took a look at that. It gives me in 2 minutes, should I really think further or research further or just ignore this company? This quick screening happens for me, and I'm interested. Then, of course, I go more detail about the company, understanding their annual report, their statements, management, products, and comparing the different companies in the cycle. If you're not interested, I just go more ahead, right? But now, yeah, today, you can if you have determined to explore this, right? More and more. Let us know for today's exercise. You can go to tools, right? Just see my mouse pointer. Create a stock screener. Okay, what is stock screener? You can here you can put some customized queries for yourself and identify the companies which are good, right? Which are wonderful businesses. For that, I have already designed one query for you, as you can see in my sheet. This sheet is going to upload in our share. You're going to get it. Don't worry. I'm just demonstrating. You can do right away with me, or you can join me later. You can do later on also. You can take this query, copy. What I did here, I just explained. Return on equity employed is less than more than 20%, and the return on equity also more than 70%. You can play with this around. There's nothing fixed. I just taken one example. You can put it maybe 20, 25, 30, or 10, whatever you like to be. Nothing. Also, you can customize this all query the way you like to be. There's nothing stop, but only some format is there, structure you have to follow. Once you visit the site, you play around the site, then you get understand how to do it. I'm giving the one idle, which is a good query for 25 wonderful company. The first screen, I'm not saying I will still going to investigate further. Third is a sales growth. How sales growth last 5 years. or the profit growth, it should be more than 18%, or debt to equity ratio I kept, typically less than 5%, 0.5. Price to earning ratio less than 20, because I do value-based investment. Free cash flow, interest coverage ratio, more than 5, and free cash flow is last 2 years more than 0, right? It should be more inside cash generation. As I see, market capitalization more than 200 typically, they see less than I see, don't, but I just kept as a sample, right? Example. I invest less than 200 as long as I'm comfortable. Dividend yield more than 0.1. You can make 0 also, is up to you, or you can increase to more than 1% as you like to. And promoter holding more than 40%. This is not part of this exercise, but still management, which is going to see the next mission, I said. But I just capture the good company, which I think typically more than 40% is good. It shows that management is interested in the company. The skin is in the game. Right? That's what I did. Now it's very simple. Take this whole query for this exercise and go here and copy and run this query. Right? With a single click, right, you're going to get all the companies which for satisfying that query, right, which are given more than capital employed and return and debt around. Total 12 companies has come up. As you can see, all these are less than 18 and so, all right, and market capitalization more than 400 or 200 I given, dividend yield is there, and so forth. But just don't go blindly and take, companies, before you investigate further, right? I can see, for example, yesterday I did a research for you, Sharda, Motors. This is, actually manufacturing company. They do for India and export also. You can go, of course, this full company more detail, understand what is happening in the company, what is the profit is moving out, growth is happening and all those things. Also you can see Concon, detail, etc. All those things possible. One of the things also is a facility to export here. You can export to some Excel sheet and you can, I just show you. You can click the sheet, it will give a structured way what all data is there. All right. For example, you can see the different sheets are there, profit, loss per annually. Last 10 years typically, get used, and all those sales is there. So earnings, price, profit before tax, and all those things are really, really quarterly balance sheet is there and all those things. You can investigate this further. But now let us move. We now actually, for example, I said Sharda Motors industry based on the query first step. This is second step. You can directly go for Sharda or any listed companies, or you can go any other company which came across, first time. You can run this query. For those, let us take a help of AI. In this case, I'm going to explain chart GPT. Right? You can please open the sheet again. Here, if you see, I given some prompts, right? And first prompt, I typically give to make chat GPT, to be ready for my further queries. As you see in this query, you are the, I'm just praising the chat GPT, making his position very clear. You're a world-class equity analyst and expect an instruction fact. Based on fact, don't assume it because chat GPT things assumes, learns from somewhere and that code. I'm make it ready for my further queries. That is very important. Many people miss this step, that starting that put the queries, but in that case, many times if query is not good, it assumes many things and gives wrong things. Right? Yeah, absolutely it's ready. I'm a challenge. I'm giving challenge because everyone challenge and ChatGPT also likes the challenge. It is ready with the all the decoding and so you can give further details. That's what it's saying. Yeah. Second, let us go to second prompt. Second prompt, it says the only yellow marks you have to fill up based on which company you're investigating. What I'll do, I'll just copy here. I will paste. Or what you can do, you can just go here, you can copy here. For example, the company name, right? I'll go here. I'll take this company. Right? This is what you do. And what is the website? I'm putting website as a few more information because it has more comprehensive website maybe. Just copying that link up, okay, right? And visit screener link out, right, for more information. I'm just going to the URL and copying it as it is. Okay. I made it very simple for you, so not too much, but only have to feed the right data so that we get the right information. The other ChatGPT doesn't understand where to look for. I know other generalize the things, which may not be accurate and relevant for it. Now let us copy here. And this is a second prompt, which is a deeper understanding of the what company is doing it. Copy. And now what is that? Is going to the website as well as it is going to the different companies. Is based on it's giving the summary to me what the company does, right? It company does auto component manufacturing in a single click, right? With the query, it has given me all these product services doing what is this everything has embedded in the query, a prompt. You can see you can modify also. I given the one of the good prompt, but if you see it's better, of course, please go ahead and modify as you like to be, right? But just make sure we consciously do with the right intention, information to be given. Otherwise, if you use some vague prompt, then the ChatGPT doesn't understand it is using some vague answer. It's like put some junk in, it comes junk out, right? That financial revenue, etc. We'll go to deep more. Typically, I seen ChatGPT doesn't do very good with the numbers. Therefore, I had to go to like to feed it, right? It try to. I think that's one of the limitations in ChatGPT. Next step is doing advantage challenges. It's basically going to face cyclical dependency on the OEMs, of course, because they're going to do orders and so forth, right? What is a simplicity productivity? As you asked to rate it, 7, 8 is simple. How is management? You can see companies doing it, business model and so forth. And computing thought is also is given. Overall, it appears to be a well-run auto component business with strong businesses, health margin, good growth, and good returns. Right? Let us know. You can, as I said, you can modify your prompt if as you like to be, but do it consciously with the right. You can improve it. Of course, there is a lot of scope improvement. It's always there. You can do better and better. Now, next, go to the next prompt. Prompt three to understand the durable moat, right? How much competitive advantage the company is there, what is the in the marketplace, right? Because of lot of competition, is it in suffering? Is what is the strength it has? I'm asking it. The prompt you see, it says identify the company's competitive advantage, business durable moat to protect its revenue and margins, right? Analyze based on the brand power, cost advantage, switching power cost, networking effect, which are typically competitive advantages. And finally, more view the model of the moat durability as a score, 1 to scale, 1 to 10, and 10 is the highest. Okay, so let's see what it does. This is a query output. It has different parameters. Is even more strength like 8, 8, 7, 8, all those things. And networking effect because there's no it's directly OEM it is discussing and so forth. It's not much new. Again, there's comprises 4 of school and given 7 out of 10. Right, this is above average. And so, inside, if somebody in the inside asks nature mode, engineering competency plus regulation mode, he's already got the regulatory authority, permission and also board, and long-term OEM partnership and relation that company is maintaining. It's a highly high in IC ecosystem, internal combustion engines, right? Because it's more handling. It's not EV. It is a threat to it, which is now very much very upcoming in the market and growing very well. Strategy hedge for this, their diversification into suspension system, supply chain, sustain competitive. That means they're earlier they're making some, internal combustion engine related components. Now they're moving to suspension related towards very comfort. This is common part required as well as in the EV, right? Yes, also. All right, just I hope you are learning a lot of things, and in this single shot, you're getting a lot of insight of your company Within 10-15 minutes you can just complete, but you get the deeper analysis. And let us see if our finances think, what I written here. What I suggest take the screenshot of the data, because I try to put the data for us to do it, but it's not learning properly. Therefore, what I suggested here, to take the data, you can copy it from please here again. I'll show you what to do. Copy here the prompt, right? You have to upload some images, which is the financial data. The three data which I asked to upload, I'm not looking at the quarter level, no. You can do if you want to. There's nothing, let me. You can enlarge this all. For sales is there. Operation, net profitability, dividend payout, and all. I type it in the single studio. Yeah, you can do screenshot, or what you can do, there is almost snippet tool, right, in the Word, Microsoft Word. I'm quite sure there will be some, Apple also might have some similar product, or similar, app, where you can just take a screenshot of the area which you like to be. I'm going to show you, click here on snipper shot, click on the new, and start taking split area. I'm not taking PM, I'm taking only latest 20 March 2025. Okay. Now it is captured as an image, just remember. And what I'll do, I'll go to the chat GPT and Control C, Control V, right? That means that the screenshot has uploaded here, right? Let me go to the now the next screenshot. This is a profit and loss. Second is a balance sheet. Right? Balance sheet again, you can draw down the things, you can capture, or you can do the screen small, right? You can get data, machinery plant, and also copy here, screenshot again. Again, I taken it till March 2025. Okay, go again to the chart GPT. Okay. Just copy here. Okay, I copied the. Okay, it is not taking currently because of the time limitation is a free. What I'll do, I'll switch to the my paid account, and but I have to run the queries again. Let me redo there. Okay, because the free account, doesn't allow to upload many things. Right? Let me go to my account where it's a paid account here. Yeah. What I'll do, I just started a new chart, but I'll run the queries again. Quickly, it doesn't take much time. Let me do it. Okay, first prompt is again instructing the same which I did. I made his role very clear what ChatGPT should be doing. Mine is paid, which is a ChatGPT 5. Okay, is again ready. Is ready for his job. Now I'm going to put one by one the queries. The same thing company I'm taking, which is Sharda Motor Industry. This is only for just remember, this is not any recommendation. This is only for educational purposes. I'm very clear on this. Okay. Again, I'm going here and copying the prompt. It will give more or less the same result, but may refine further because of I had made ChatGPT learn more and more because I've been using very actively ChatGPT for many things. Therefore, it may more refined answer. And this way, it's like this: how much you teach or make it learn, it's going to learn and refine its answer. Okay, that's the way it has given now more detail, the simplicity, predictability, and business strength based on the prompt which I give, right? Overall business. Now go to the prompt 3. For prompt 3 was for the to identify the competitive advantage, how much the business is competitive and is able to make the money. Yeah, it is again searching web and is also following the things because I given instruction. It is said it's, you can put it or you can mention in the prompt also, uh, of course you are going to upload and doing some references, but it's going to not only company website or screener link. You can also ask to go to the relevant pages like moneycontrol.com or NSC site, DSC site, and all those things. It does go and does it. The whole of the output typically depends on the quality of the prompt. I try to keep it very simple as a beginner to moderate stage as of now to make the things clear and what are the possibilities are there for it. Right? As I said, you can always improve the things and prompt. And again, it has given the rating which you see. Here, just see. Last time it has given 7 out of 10 in the previous, but now it's getting refined mark. It's giving only 6. All right, and this I say the variation may be there based on the query, quality of the query, or how much it has learned in your account. Okay, now go to the. I want to just to show you the how to upload the result. Let me go with the copy first prompt. The prompt 4 means, as I say, is from the screener copy upload profit and loss, balance sheet, and cash flow screen shot of the company. Right. I just first I'll do I copy the prompt. Okay. Now I go to the screener of the company. Right. I was there. No problem. I can copy image from anywhere. Uh, yeah. Okay. And what I'm doing, I'm taking again is new plus is the new. Okay, it's very simple tool. Just go ahead and you can use it. This solution. Yeah, copy that. I'm not taking a TTM trailing the result. I'm taking only March 2025. This is copied, and now I'll go to the chat GPT, upload it. Just see control V. It's already copied. Now you see at that time it does free was does give issue, but here it is taking because it's paid. I can do many things with the paid option. There's a profit and loss. Second is the balance sheet. Let me take the screenshot of it again. Again, I'm taking till March 2025. Balance sheet gives all the shareholder fund, what is the movement is happened, and what is the loans the company has been taking, how much asset it is owning, what is changing, and how much shareholder fund is changing. All this. Okay. Now the last third final checkmate is the cash flow. That is very important. You can upload, you can enlarge everything if you like. I just currently I'm doing only operating cash flow. Yeah. Yes. Again, this transfer is captured. Now go here and copy. Okay. In this step, with the fourth prompt, what I did, I copied, three statements, which is a profit and loss. Second is a balance sheet, right, for last 10 years. And the third was a cash flow statement for last 10 years. With this, I'm feeding all the data and asking to analyze it. But I'm looking at, and if you see my query, in query, I asked only maybe 5 years, right? May not be 10 years. If you want, you can do it. No, nothing wrong. Or 5 years, 10 years, or 7 years, as you like to do. Uh, let me see. Yeah, I'd say latest 5 years I show you. Okay. Which is typically comes after Corona, right? Because we don't know what happened during Corona and before. I just, because that matters more and anyway, of course, just remember this all data is still past data, and we are investing for the future, right? And it's analyzing now. Meanwhile, just meanwhile we see. Let's wait for a minute. A ChatGPT 5 is a new launch. It takes a bit longer period to analyze. Maybe they made maybe heavy to analyze this algorithm. It is giving me, just this trying to satisfy me saying that you're thinking for longer for better result and all. We just take what it says and because It is understand different parameters, calculating different parameters, which is the data of support. What it is doing, what the images are uploaded is taking those images and try to extract the information, and the same information I asked to analyze it for latest 5 years, right? Not 10 years. And accordingly, it has to present to me. Okay. Why I'm just to know why I moved from the free version to the paid. Was free, there's some limitation. Of course, you can have buy some minimum with the go and is available. Now you see it's giving the sufficient table with table format. What is the sales growth? What is a free cash flow and all those parameters is giving nice table to me. And also it's giving revenue commentary. Uh, what is the growth, right? Sales rose from the 1,737 crore to the 2,000 in the last 5 years, which is almost 101% to 0.97 year-on-year growth there for the company. Margin expansion also is a star. OPM, which is 7% is given, operating performance margin. Net margin is a 4.5%, which is okay. Which moved to 11%, okay, it's good. That's a strong 6.5% of growth, net profit margin, right? But I have to see more. Is it because of the actual operation, or it is because of some exceptional gains or some exceptional thing happened during that, 1 year and so, right? That we are to check. But I'm quite sure I hope you're learning, and with single clicks or with ready-made forms, you can do much better within a short period of time. Actually, if you see this overall, it not take more than 10-15 minutes for you. It's only because of explaining and doing slowly, it will feeling longer. But if you start doing yourself, you can pick up and become cognizant once, and will do faster and analyze many companies in quick. All right. Now move to the next prompt. Next, which is last prompt, which is the what is the business, right? This is all historical data, right? Data is all numbers, etc. But I want to see based on this all data, numbering, a trend. How it is going to happen in the future? Let me run the fourth query or fourth prompt. Okay, it's doing just to let me go through what is the based on the factual information, because the ChatGPT has a habit of assuming many things. If I ask you factual numbers, what is the information I given, what is the mention the number on the website, all those things. Factual information summarize the company industry trend growth. To look understand the industry. Prospectus of the next 2-3 years, because just to example like the near term 2-3 years, what is going to happen in the operation company's operating market. Give the top 5 reasons why company effectively utilizing capital to grow, right? And you can include based on vision and execution capabilities of the management also. You just let me know what you expect based on trends and things happening based on last past. What you see in the next 2-3 years, trying to project it. That is my intent. I given the task it. Tailwind, growth enabler is growth will be there. That is saying tightening the emission regulation norm will be there. China plus strategy, which India is doing it. Expand potential. You can just go down now and understand. Also, it is doing opportunity plus risk. All right. Electrification habit is because intercompetition is going to increase slowly and slowly, and more EV vehicles are coming up. It has been summary. Outlook also is given moderate to strong growth expected, ahead. I expect. It has given its own opinion. Revenue growth is low double digit will be there around with 8 to 15%. A CH compound annual growth rate for a well-positioned component to player, because it's been built for the company for long period of time, and the company has built a rapport with the OEM solution manufacturer of the vehicles. Margin comparing, compression risk is there, okay. 5 to 10% because of maybe the demand of the internet conversion again is related to industry effect. Sharda, if capture new OEMs, like it has to build the new OEMs and also and export more and leverage its emission technology to outform. Like it has also what the job remains for you, then you have to just see how the company management is working on these, next is it really taking care of how the company is mitigating this risk moving away from internal combustion engine to the electrical EV vehicles. Also, it has given 5 reasons. Effective using capital positioning, all those questions which are asked. That is what it has totally summarized. I mean, that based on this little, I'm quite sure you can, the time which has taken, typically 1 to 2 days is to be taken if you're reading all those things. Now it has given only few minutes, right? It will help you to understand what the company very quickly. Of course, you can improvise the prompt, as I said. Also, you can add also more annual reports. You can add more recent concur of the management, PPTs, all those you can add, keep adding. And also you can do and ask, compare, analyze more, what is the risk and all those things you can ask. Or you can do one more thing, you can ask some nearby companies there, you do competitive between two companies, right? Two companies are there you want to compare. That also the ChatGPT can do. But I showed you simple first step foundational course as a how to use identify the company first wonderful business using the screener. Second, you pick up one company which you like to be just want to investigate further, and I have given the powerful 4 prompts, which are very powerful. It will help you to screen the depth X-ray of the company, whatever the management is saying, but increase the depth based on the facts available, in the public domain. The third step for you, whatever till now you got it, you have to put as a Wealthathon Mission-4. The exercise for you is go to this. I given the checklist to this company. Then you have to compare those, checklist. We have to read the company analysis report, everything, and click download this checklist. Yeah, this is checklist here. Then you see what is, do you understand the company? Simple, you rank it, based on the 0, 1. Otherwise, what I can do is instead of 0, 1, I can do 1 to, 0 to maybe 10 scale. I'll change that item and upload it here. You can scale it, right? Based on scale, 10 is understood very well, and 0, is not understood or clear. You can create all those. This overall rate will going to come here, right? For all the sections, there are total 4 sections are there. Understanding the business. Second is the durable mode, which is the prompt also. Third is the financial strength, right? How much this all data is available. Just go to read, understand, and put the numbers as per your understanding. And fourth is the business vision and scalability. How will you see the company is going to happen in the future, right? And finally, we're going to be the intention here. I want to see the terms more careful by reading, analyzing. That's why I given the checklist, and the checklist also help you to identify other companies when you're doing analysis, right? And finally, for you is upload, go to your master dashboard, which is there, and click on the 4th mission, right? Which is this one today, decoding wonderful business. And, just click on the tab, you go to that particular tab and try to answer all the questions, understand how much you understood for the company you selected. Just do for 1 or 2 companies. The whole intention of doing, I want to run through this exercise. And just remember, at the initial, it may take some time because of learning. If you're learning first time, if you're doing already do some other way investment, you go to learn right way for the value investment. That will help you and embed the things right way. Just remember, if you do 2, 3 times, you'll be very easy for you. Other next time you'll do more faster and faster. But you do first time with the hands and simply to understanding one by one. Maybe initially takes maybe half an hour or more than that for you, or 1 hour also. How fast you're learning and how much background you have. But do it diligently one by one with the scores and fill up the complete sheet. This is the assignment for you for the mission 4 to complete. Remember this, right? The running etc. is the exercise. Finally, you have to put in all the numbers and data because I want who is qualifying for the Wealthathon mission. They have to complete this complete sheet, and I want to see all filled, and my team is going to check. And those are only going to complete finishing, going to get Wealthathon Finisher Award. Just remember that it's available for you. Okay, I hope this is very clear. What we did today, just a quick recap. We understood the theoretically what is a wonderful business based on different parameters, and don't take parameters on the face. Be careful, understand why those numbers are there like that only. Why some SEO is low, why SEO is high, why dividend is high or low, and that take a call. And identification is very simple. Next step, we just went to the screener, right? We run the query which was given, right, as per the sheet, and we got this result. You can select any company from this list, or you can pick any other company which you like to be, I just given one sample to you. This was the second step. First step, understanding the terms. Second step, running the query to identify the wonderful businesses. And third step is going to the chat GPT and running one by one all the queries. Please read all these details as for now. Just to save the time, your time in this call. I only given the only highlight the main point, but if you read all, you become more and more understanding and just see. Next time we work faster to analyze where to look and quickly move ahead. Right? But first time you read everything, or first couple of times you read it. So that will help. And after reading, finally you have to go to this sheet. Wonderful sheet. Put the checklist scale 1 to 10, all the scaling you do, and you'll get it, the numbers, right? And finally, everything once done, go to your master dashboard and complete your mission 4 by clicking the tab and score everything. Right? Read the question and it's just with the scoring and just click with the numbers, right? Which are suitable, which you understood, and being honest with yourself because there is no exam as such. But I want don't worry about the marks, how much you are getting, but at the end, what matters is how much you comprehended, understood, and are going to use in your life for identifying the wonderful businesses and doing the investment. Right? I hope this is very clear. Uh, with this, let me know if any queries. I am ready to happy to take one by one, and we can move ahead with the further. Okay. Shantanu Kumar is asking, we have to do all. Yes, Shantanu Kumar, we have to do. And maybe few things you may be knowing already. I'm not saying no, but do it yourself one by one, and that will make you things clear and will be more confident and where to look for. Don't take any number on the face, right? That's very important message for you all. To undergo, see why that number is there and what that really means is really why that number has come. Ask that question because now the world is who is asking right question. How if 50 questions is getting the kind of the chat GPT we ask the question right in the terms of prompts. I hope you learned a lot of things today. Do the exercise. If you're already starting along with me, very good. And if you're taking more time, don't worry. But that's why people taking this marathon session on Saturdays so that you get whole Saturday, Sunday, 2 days, free for you. You can just if you see just you can do these things, within 30 minutes to 1 hour based on how fast you understood or doing it. But do it. That's very important. But don't try to do all the missions together. That will may confuse you and take overwhelmed. But do one by one. I hope with this we are ready to move to the next mission, which is mission 5, which is on the evaluation of the management. It's very important. This is the next logical step after identifying the business. Business अच्छा है, strength is power is there, growing, but the management कैसा है, right? That is who is the ship captain, right? We're going to explore that. Thank you very much for joining, and I hope got a lot of things. As usual, I'm going to upload these all videos and the activities sheets etc in our portal, the intelligentinvestorhub.com, the learning dot the portal is there. Who is a member, they're going to access it and do it and watch the recording. If you don't understand something, you can watch in no time. Take your time. But do it sincerely. It will help you only to identify the right company. Okay, good. With this, I'd like to thank you everyone for joining again and see you in the next mission and which is next Saturday. Thank you.